Stocks plummeted Monday as markets worldwide reckoned with Friday's jobs report last week.
We have never been down 1,000 points ever, not even intraday on the NASDAQ.
This is my fourth presidential election at the Fed. We never use our tools to support or oppose a political party, a politician, or any political outcome.
World War III emergency Fed rate cut, something we haven't seen since March 2020. This is what markets are discussing today as everything is in the red. And I mean everything. Microsoft, Google, Meta, and of course cryptocurrencies have taken and been decimated by the announcements coming out, of course, from the jobs report and Japan raising their interest rates and crashing by over 12% today. Bitcoin even touched $49,000 with Ethereum touching $2,200 at one point. Here's, of course, what Wharton's Professor Siegel believes is about to happen at the Federal Reserve. Take a listen.
Absolutely. And this may surprise people. I'm calling for 75 basis point emergency cut in the Fed funds rate with another 75 basis point cut indicated for next month at the September meeting. And that's minimum. The Fed funds rate right now should be somewhere between 3.5% and 4%. Let me give you very simple logic of my position here. At the June meeting, the Fed has said that the long run Fed funds rate, when inflation reached 2% and unemployment has come up to 4.2%, should be 2.8. That's the normal. 2.8 is the normal Fed funds rate. Well, on Friday, we blew it across the employment number. We're at 4.3. That even argues for a lower one. Now, as far as inflation, we're at 2.5%. We've gone down 90% towards the target on the inflation rate. We've overshot the target on the employment. Those are the two targets explicitly mentioned by the Federal Reserve.
And that is exactly what the Federal Reserve is looking to follow right now. I don't necessarily agree with Siegel in this sense that we're going to get an emergency Fed interest rate pivot. A lot of people are praying and expecting the Feds to come out and decide to cut those interest rates by maybe even 50, if not 75 basis points today, magically saving and propping up this market. But I got news for you guys. We have to break down why these markets are falling in the first place, which of course is because of the pressure from Japan in the interest rate cuts and the Federal Reserve keeping interest rates at a high pace for such a long period of time. On top of this, you have Warren Buffett sold Apple, Tesla, and Nvidia, and that alone causes more angst. Investors saying, what does he know? This is somebody that has met with President Biden. This is somebody who has advised this current administration, and after advising them months and months, if not years ago at this point, stepping into that White House, has been selling off his stocks more than ever. Is there a reason why he is stockpiling so much cash? That is what we're talking about today. So first, let's start off with the economic calendar. What I believe Jerome Powell is going to do is not immediately react to this market. He's not going to decide because of one job data report to pivot by 75 basis points. This is somebody who has been standing to his word the entire last 4 years. And in fact, technically since 4 administrations ago, as he mentioned. And so what I'd be focusing on is going to be the red bars here, but specifically what's happening in the United States, not in Europe, not in Australia, but what's happening in the US. So what I actually be paying attention to is next Tuesday, which we're going to get our producers price index month over month and year over year, as well as on Wednesday, the biggest data report is going to be the consumer price index. You can see it is massively red on the economic calendar because this is going to have a major impact on the Fed's decisions coming late September. The Feds pivot in these markets, guys, not because they want to or because they have a soft landing or because inflation is magically transitory. It's because something generally breaks. They need to see not just one data report that shows cracks in that surface, especially in the employment data, before they decide to cut their interest rates. In this case, whether it's 50 or 75 basis points. I am in the category of 50 basis points, but we could see a 75-point reduction in September if data continues to be persistent with what we saw last week with the jobs data. And all I have to show you guys is this. Historically, you're going to get at least a minimum of a 27% pullback in these markets. Specifically, we're looking at the S&P 500 index when the Feds do pivot during a major correction like this. So we've seen historical levels of interest rate hikes over the last few years because of COVID-19. Now we might see historical reductions due to COVID-19 in the money printing. I would pay attention to where we're currently sitting. And if we look at the NASDAQ, we're only down roughly about 15-16% on the NASDAQ. And on the S&P 500, we are roughly only down 10% on these markets. Now, the market conditions that we're in are different. You can see on the weekly, we're actually coming down quite heavily. On the daily here, we're now in the oversold territory. I would not be surprised if markets overstated this, if markets looked at what happened over the last weekend with Japan, of course, the tensions in Israel and Iran, in the Middle East, them responding to Saudi Arabia saying, hey, we don't care anymore. We're going to pursue this. And of course, the speculation around the negligence and the incompetency of the Biden administration, which I'll show you what the chair of the Economic Council, in terms of economic advisors, had to say about money printing in this economy. But markets are fearful. Markets are scared. And we are seeing the extreme greed on these markets at a level we haven't seen since Luna. Terra Luna, in extreme fear of 19 on the market. Historically, guys, when we are under 20. Yes, you see 20 right here. I'm going to put the 20. I'm going to put the line right here. Historically, when markets are this fearful and we are under that 20 on Bitcoin's price action, you tend to be near, if not around, a local bottom. And the last time we saw these levels, it hasn't even updated yet. We are at 16, was when Terra Luna, Do Kwon, collapsed the markets in 2022. Not even FTX brought us down to these levels. So make sure you guys check out FOMO.io to keep your guys' emotions in check, because you generally want a dollar cost average in the red and sell and buy in the green. But it's not just that. It's about liquidations. It's about the fear mongering that I believe has created this massive futures gap on Bitcoin's chart here. And so when I'm talking about markets, of course, we're a crypto focused channel, guys. I was telling you guys at $70,000, there was an 80 to 90% chance this futures gap would fill. Of course, not only it hasn't even filled yet, it broke past it due to the amount of fear in the markets. We've now bounced up quite a bit, but I do expect this futures gap to fill, as well as the new futures gap that was created between $59,000 and $62,000. That is a massive price range for Bitcoin's price action. But I want to show you guys why I'm incredibly bullish on these markets. Not only do Feds pivot when something breaks, but yes, it does coincide with generally somewhere near a local bottom. Whether it takes a few weeks or a few months, we're almost out of that bearish trend. Because what is the government going to do to get us out of a bear market? What is the government going to do in a time of crises? Well, in 2020, we saw what happened. In 2008, we saw what happened. In the year 2000, we saw what happened. Here is one of Biden's economic advisors telling us what is...
Yeah, I guess I can't really talk. I don't get it. I don't know what they're talking about. Because it's like the government clearly prints money. It does it all the time, and it clearly borrows. Otherwise, we wouldn't be having this debt and deficit conversation. So I don't think there's anything confusing there.
I don't think there's anything confusing, even though he just said it was confusing to confuse the confuser of the confusion audience. I don't know. There's so much confusion here. Yeah, that is, of course, the handpicked economic advisors chair, Jared Bernstein, from the Biden-Harris administration, which, of course, if you don't want to see markets look like this coming after elections this year, I mean, guys, put 2 and 2 together. 1 + 1 = 2. 2 + 2 = 4. This is simple logic, simple math on what is going to take place in these markets. These are the people running our advisors. These are the people running the committees and the decisions behind everything that matters in our economy. Yes, I do believe one of the only answers out of this is to tokenize everything with blockchain and Bitcoin and crypto. So are we going to see a $150,000 Bitcoin? Are we going to see a $75,000 Bitcoin again? We could be trending backwards, sideways, and up and out of this panel for months, all the way up and towards elections. We're looking at another $70,000 Bitcoin. When you're looking at your liquidations, guys, we are so massively oversold. It's insane. We have tens of billions of dollars in delta spread to the downside. We had a negative 40 billion when we touched 49K. Now's not the time to be fearful. Now's not the time to short the market, right? If you are, you should have done that at 70K. Think about this for 2 seconds. I want you guys to think about this for 2 seconds, okay? What were you doing at 70K and what are you now doing at 50K? At 70K, you were either thinking about buying or you were buying heavy into the market and you were believing it was going to go to 80 to 90 to 100K. Now at 50K, you're thinking about selling or thinking about shorting because you think it's going to go to 40 or 30 or 20K. Think about what's happening here. That is the retail emotions playing this game. And we have breaking news coming out of these markets right now. I'm going to head over to my Twitter for you guys, which if you haven't already followed me on Twitter, make sure you do so. Europe's 4th largest hedge fund, Capula Management, just disclosed $500 million in spot Bitcoin ETF holdings. This is because everybody knows Bitcoin Bitcoin, while it's not the greatest store of value yet because it's volatile, it will be when it's at a $3, $4, $5 trillion market cap in the future. I don't know if it's a year. I don't know if it's 6 months. I don't know if it's 3 months or 2 weeks or 4 days. We all know Bitcoin will break 100K one day, and that is what I want everybody to pay attention to. I have picked up a lot of Ethereum here on CoinW. We have a trade that's open right here, a minor trade, small trade, 2x leverage, nothing crazy. But of course, if you guys are in our Telegram, free Telegram, the link will be in the description below. You can see when I'm buying or selling. Of course, I bought almost $9,000 worth of Ethereum this morning. When we dropped down to $2,300, I was like, wow, this is when I want to jump in and start dollar cost averaging into these markets. People bought Ondo at 50 cents. It's already back up to 70 cents. It's like a 50% gain. Everybody is fearful, guys. You want to be greedy. And of course, shout out to today's sponsors of this video, guys, Houdini Swap, which if you guys haven't checked out Houdini Swap, this is one of the coolest platforms on the market where you can take Ethereum and buy Sol, or if you want to buy XRP, you can type in any chain, any crypto, and you're able to convert it over. So Sol to XRP. You can even get Ethereum or, Ethereum to base Ethereum. If you guys want to use other networks, you can swap your Ethereum to any mainnet you need to be able to buy, sell, and trade your crypto. They're now almost at $600 million in volume. We first partnered with them. They've already done 100 million in just the last month. This platform is incredible to use. It even has some really cool privacy swap features. So if you guys haven't checked out Houdini Swap, make sure you guys go to the description below and check them out today. If you guys are using MetaMask, Phantom, or any platform where you guys just need to transfer your ETH, your BNB, your XRP, your Quant, whatever it is, to any chain, guys. That is what I have for you today. I'm waiting for this futures gap to fill in. As we predicted, it did end up closing the one here. 80 to 90% chance to fill this gap here above us. I believe it's going to fill very, very soon. And of course, that is why I have entered these markets, guys. Thank you for watching. Make sure you hit that like button, subscribe to this channel, turn on those post notifications so you stop missing out on all this alpha.